A market right now in post-market trying to weigh better than expected second quarter, but a third quarter that doesn't look great either. How are you weighing these results?
Yeah, there's really not a whole lot to cheer about, Taylor. I mean, yes, it was not as bad as feared for the second quarter. I think a lot of that we can owe that to, the success of Stranger Things. They were pretty good and kind of, spreading that out also over 2 quarters. So, maybe churn would be a little bit controlled because of that. But then again, you look at the third quarter guide, that's not reflecting a whole lot of optimism. So, we were looking for about 2 million. We're only at about 1 million. And there's really, I think, what the market is really looking for at this point of time is really some clarity, not just on the subscriber growth trajectory, but also on other metrics. So, how are they going to drive ARPU? How are they going to drive margins? I mean, Gina just spoke about that. And you look at the margin guidance for the third quarter, it's 16%. So well below the 19 to 20% that they were that they're guiding to for the full year. And so there's pressure all around, top line, bottom line, subscribers, everywhere.
The company, Geeta, has made a lot of changes in the most recent quarter. They cut costs, they laid people off. The company now planning to introduce this lower-priced, ad-supported version of the service. How does the company do this in a way that doesn't cannibalize people who are paying for that ad-free tier? And then essentially what they're doing is they're trading down for a less expensive version, but might not be as profitable for the company.
Yeah, so this has kind of been a real, head scratcher, and it's this is why people are unable to get too excited about this right now unless we have all of the details. So remember, advertising is not in Netflix's DNA. This is something they have to build from scratch. And yes, you're absolutely right, Tim. They are going to be trading down, and yes, cannibalization is a huge, huge concern. But at the same time, they do have a lot of positives working in their favor. They are the largest streaming platform in the world. They do have 220 million subscribers across the globe, and they do have an average household spending over 2 hours per day on their platform. And that is what advertisers are looking for. They're looking for eyeballs, and they're looking for that constant engagement. And so the thinking is that they should be able to charge ad prices that are pretty robust. So if a Roku, if a Hulu right now is charging, let's say $30, $40 CPMs, Netflix should be eventually able to charge maybe even 50% above that, just kind of given the quality of the audience and what they can offer advertisers. And so the general thinking is that their overall ARPU, even though the price is going to be lower, just the amount that they can get with advertisers would actually lead them to have a total ARPU which is higher than a standard plan. So in the US it costs about $15.50. Maybe with the advertising element introduced, they can get about $17. So they're not really going to be sacrificing unit economics.
And Geeta, when it comes to what drives eyeballs, theoretically it's the content. I'm sure we would all like to believe that. And in terms of the content pipeline at Netflix, I mean, is it robust enough to necessarily reverse what we're seeing in terms of subscriptions?
It is pretty robust. So, we have the Gray Man that's coming out. It's supposed to be their biggest film ever, the costliest film ever, I should say. They do have new series coming out as well. You have Sandman, you have The Crown coming in later. There are a lot of different films. So yes, they do have a content pipeline that seems reasonably good, but reasonably good is not good enough anymore because you have all the competitors who are also coming out with their huge content releases, whether it's a Disney that's ramping up big time, whether it's an Amazon that's doubling down on sports with Thursday Night Football and with this new Lord of the Rings series, which is arguably the most expensive series ever created in television and streaming history, or whether it's, a Game of Thrones prequel. So everybody is going after that sub. And in this environment where it's, there's so many challenges with inflation, with recession, you really have to take some, you have to have those big hits, and you have to have a steady stream of big hits. And that's really what the market is going to be looking for, any clarity around their content strategy.